Hi, I'm Mike Collins. I'm the founder and CEO of Alumni Ventures. Today we're going to talk about predictions for 2025. As one of the leading, most active venture capital firms, I think we have a point of view on what the next year or two may look like. Again, predicting the future is fraught, but we'll share what we think and go from there. Okay, before we get going, I'll do my disclosures. This presentation in particular, I'm speaking today about Alumni Ventures, my views, our views of the associated investing landscape. The presentation is for informational purposes only and is not an offer to buy or sell any securities, which is made pursuant to formal offering documents. So yeah, this is just our opinions. Here we go. So again, not holding back. These are kind of 5 things that we think are drivers in the next period of time in the technology, entrepreneurship, innovation, venture capital area. I think there's many technologies that are on geometric curves right now, which humans have a hard time fully understanding, accepting, acting upon. Generally, we think that we're entering a period coming kind of out of a healing period that's going to be pretty positive for entrepreneurship, venture capital, and markets. Again, especially if you look at not on a day-to-day, week-to-week basis, but I think the next couple of years looks promising. We also think there's a trend largely driven by technology, with efficiency doing more with less. The cost of a minimum viable startup keeps going down in the amount of capital, the number of people, the time. These huge trends that I talk about, number one, obviously have what we call shadow trends and countertrends, pushback. I think we can anticipate those things happening perhaps sooner than you might anticipate. And then finally, just a couple of words about timing markets and where we are in cycles and those types of things. So let's hop right in. First, just a little bit for those of you that don't know, I come from the Midwest, came east to go to school. First job was in venture capital at TA Associates in 1986. I've been in this space of technology, innovation, venture capital my entire career. It's what I love. Started Alumni Ventures 2013, 14, really personal experience of having access to a large, high quality, diverse venture portfolio. I thought was basically impossible for individuals. And so that's what we've set out to do. And so like a lot of people, most of my net worth has been driven by just a handful of investments. So that's me. Our firm, just a little bit on us. We're focused on retail. We have just about 11,000 investors. We've raised over $1.4 billion. We've invested in a lot of companies, invest about 300 or so per year. 2024 isn't out yet, but we're typically ranked, either the most active or one of the most active venture capital firms, partly because we are a co-investor. We don't lead, we don't take board seats. We try to be a co-investor of choice for entrepreneurs. Next slide. So where did these ideas come from? Obviously, we are in the ecosystem. We talk to entrepreneurs. We talk to other venture capital firms. We share notes. Obviously, our team has dozens, hundreds of years of experience. We've been around, so we think have a perspective that's a little longer in time horizons. Obviously, with 45 or so full-time venture capitalists who are writing think pieces, developing their own expertise. We share a lot of ideas about what's over the horizon, what's next. Part of being a venture capitalist is a willingness to make bets, a willingness to make predictions, a willingness to have a thesis, with the humility to know that you're wrong a lot. You're wrong about particular companies, particular, stages of technology, and is it ready yet? And you just see these things that are very complicated systems, and it is very hard to get it right, even most of the time. So humility, but not being shy about having a point of view. So next slide, Emily. So I think, as we go into 2025, look at 2026, I think the big thing to not miss is the big tsunami waves of technology innovation, which are really on geometric curves. Obviously, we're seeing this, I think, most acutely in compute and AI, and the speed at which these models are improving and their impact on really every business is profound. And I think we could see over the next, 12, 24 months, that pace that we saw in the last 18 months continue. And I think that is the big thing. So you don't want to get caught up in little stuff when there's a tsunami. So most important point. And I think it's unique. I would also recommend this book by Ray Kurzweil, who wrote something, The Singularity is Near, 15, 20 years ago. If you read that and then this, you'll see that, his data-based, chart-based approach has been uncanny in its accuracy. So strongly recommend this. But it really points to these geometric improvements, changes, things going on. Humans really are linear pattern people. We can handle, 6 times 6. We don't handle 6 to the 6th power very well. So understanding we're in a period of exponential technology change, I think, is the most important thing to know as an entrepreneur and investor. You want to be positioned and ride those waves. You do not want to be crushed by them. Next slide. Just some of the areas where, this is happening. So it's not just AI in compute, in data centers. I think that gets a lot of, obviously, of the mass communication that takes place in society. That's what everybody's talking about. But I think we're also seeing this in energy. We're seeing this in life sciences. I think we're seeing this in data acquisition. So we're just seeing it along really kind of almost in every segment of society. Some of these are first order effects, some of them are second order effects. So as we get AI and compute and models better, drug discovery will happen faster. So, and drug discovery happening faster leads to other improvements and changes, and these have flywheel effects. So my point here is more, there are dozens of places where these curves are taking place, not just in AI. Next slide. I also think that this is going to mean that there are a lot of disruptions going to take place. So I think 2025 could be the year of the deal. So I think you'll see industries that are getting disruptive consolidate to bulk up, get big. I think those can be good investments, not our space or the venture space, but I think there's going to be a lot of backlog being kind of released as markets start to grow geometrically. Again, I think an example of this is kind of NVIDIA, kind of coming out of nowhere over the last 3 to 4 years to become one of the most valuable companies in the world. I think the ceiling is higher. I think we're going to have, like we do when there's horizontal technology, new winners, new losers, and then just again, the humility, you don't know what you don't know, and to stay flexible and to stick to pretty sound principles of not timing markets, of diversification, of really being disciplined. These things are timeless, regardless of the strength of the technology waves. So geometric curves, I think a lot of deals are going to come out of that. Next slide. Second point, I think this is generally going to be a strong period. Venture capital tends to go on fairly long cycles of pretty solid, steady, really good growth. Every decade or so gets a little frothy. There's tends to be a correction and a rebuild. I think we're through one of those. And I think there's a bunch of technologies that are really going, and companies that were built, companies are built in good times and bad times. The public's perception kind of ebbs and flows, but good companies are always moving forward, growing, building. I think there's a huge backlog of private companies that have built enormous value in the last 5 or 10 years. So I just think that it's going to be a positive run here over the next, 5 years. I think again, you don't want to look at this on a week to week, month to month, even quarter by quarter basis, but I think we're going to end then 5 years from now, it's going to be much higher up and to the right from where we are today. So things look very promising. Next slide. Yeah, I mean, why? I think there's, we have a new administration. I think there's going to be reduced regulation. And this, again, is no form of political statement. It's just a read of the room. I think we're going to see low taxes, lower regulation, generally a pro technology, pro business, capitalist centric approach. So I just think that, as kind of the tip of the spear in capitalism, venture capital entrepreneurs are in really good position to benefit from this kind of environment. Next slide. As I mentioned a little bit, is, in technology, there tend to be good flywheel effects. I'll just mention one, which is if you have good exits, and again, our firm had more exits in Q4 than in the preceding, maybe 18 months. That leads to entrepreneurial success. That leads to capital being recirculated. That leads to investors feeling more confident. And it creates really good flywheels for further innovation, entrepreneurship, capital allocation, harvesting, reinvestment, etc. Next slide. Third trend, I think we're in a period of more with less. I think that I'm seeing smaller teams with less capital achieving more in a faster time period. I think we're seeing this in big tech, who's really, paused or stopped or reversed hiring over the last couple of years. I think that's bleeding throughout our society. I think the number of CEOs who are looking to do more with less, or do more with the same, or the same with less, is really just the de facto right now. So I think we're seeing this trends of, the size of the average startup, the amount of money they need, the speed at which they get it. I think a lot of this is driven by technology underlying one's ability to do this. So I think that we're going to see this trend continue. Yeah, I think, could we see the first 10, 15 person unicorn? Yeah, I think more of this kind of two pizza rule, 5 to 10 people. Do not underestimate what they can achieve. Never have, but I think you're going to see less capital, companies moving faster, quicker to profitability. Um, Again, this theme of more with less, and we're seeing that on the ground with startups. And again, that just bleeds into the entire economy. Next slide. Whenever you have a strong, and this is, I think, one of the things you get with some perspective and experience, whenever you see a big forward trend, you see unintended consequences, often negative. You see shadow trends. And what we mean by that is kind of a subtle, sometimes unnoticed trend that kind of goes alongside the major trend. I'll give an example of that. And then you always see backlash. And this again goes through every technology cycle, Luddites, that really say, don't like it, push back, fight it. Oftentimes that's, that can pause things, that can slow things down for decades even. It's very hard to keep the genie in the bottle long term, but I think we can fully anticipate not only these big trends that are going to receive a lot of the attention, but I think you're going to see really interesting shadow trends. And I think one can fully anticipate kind of counter trends as well. I'll bring that to life hopefully a little bit here. Next slide, Emily. Yeah, so again, I'm talking a little bit about both things that happened in parallel to the main trend. And what am I talking about the main trend? I'm talking about these geometric improvements in life sciences, energy, AI, machine learning, compute. But as investors, you want to be aware, you want to see the entire board. And a lot of times there's real money to be made by, kind of a quieter shadow trend that goes alongside it. This is kind of an obvious example, but it's like, if you're going to have AI, you're going to need to build data centers. Data center need to be cooled and wired and connected. And, there's a lot of companies that provide those services. Those things go in parallel with the major trend. In this case, also, we have huge energy needs that go along with the building of data centers. Facebook basically saying, hey, somebody come build me a nuclear power plant. So you want to be aware of those trends, the counter trends, the shadow trends as well. So this is an example. So we wrote a piece called Welcome to the Bespoke Economy. And basically says as AI and robotics get better at everything. And again, 2025, 2026, I think robotics could get as much news and interest and excitement as we've had in AI. I think it's not going to replace AI. I think it's going to be yes and also robotics. But as these things hit, I think there is going to be a trend toward bespoke things that are very human, very high touch, very low technology. As people spend their days working on screens and working with AI and those kinds of things, I think they're going to want to go to a concert. They're going to want to go to a sporting event. They're going to join a running club where they're hanging around other people, going for a jog, meeting up with other people, laughing over drinks. They're going to crave handmade things. They're going to crave nature. They're going to crave the things that are fundamentally human, that is not technology. So I think there's real opportunity here to invest in the bespoke economy, the personal high human touch. Next slide. Yeah, we talked a little bit. There's examples of this. We're not going to go through all of them in this report. But I think we're going to see high tech. Obviously, it's going to get a lot of buzz. We invest in a lot of deep tech, strategic tech, AI, quantum computing, all of the above. but you want to keep your eye on this bespoke economy. In particular, you love when you can take a hybrid business where you can combine a deep technology-driven company with a very human layer on top of it. So kind of 2 + 2 = 10 if you can combine high tech and high touch. Next slide, Emily. Yeah, and so again, just some examples. We invest in 10 or so companies per week. Here are just 3 examples of some companies that show the range of things that we believe in. And again, I think we should fully anticipate the speed at which things happen in our society move very quickly. So I think you're going to see, robotics come in, and you're going to see a backlash to robotics. You're going to see AI come in and change things, and you're going to see a backlash to that. So I think we should fully anticipate, the rise of kind of anti-tech, anti-entrepreneur, anti-VC, anti-capitalism will exist, and it will, as there is profound change and societal impact, you can fully expect that there's going to be a group of people that are going to not like it, be displaced, and push back. And so, I think just being a prudent player, you want to understand the entire board. Okay, next. Timing of markets. So again, yes, this is trends, this is predictions. We have our point of view, we have our verticals that we're big believers in. But I've been in this space 30 years. There is entrepreneurs solving problems, creating new problems through technology that have to then be solved, and creative destruction about the new replacing the old. Nothing stays the same. I know these are like chestnuts, but I just want to reinforce that, this week we will be investing in 5 to 10 companies with amazing entrepreneurs looking at a problem, trying to build something, who may or may not succeed. We may not even know for 3, 4, 5, 6 years, but that's the capitalist system. And so I come back to the, when is the best time to plant a tree is 15 years ago. The second best time is today. So just a believer in innovation, technology, entrepreneurship, the fundamentals of diversification, backing good teams, being patient. There's huge time arbitrage opportunities in our society where the news cycle is just nanoseconds long. So I just encourage people to understand the space of entrepreneurship and venture capital. For many of you, this is an area that is part of a well-diversified portfolio, and just stick to the fundamentals. Don't say it's too late, too early, this, that, or the other thing. Just invest consistently in a large number of good ventures, and you do really, really well. So again, lots of opportunities across the board. When I started out in this business, there were certain segments of society where, technology and innovation was having an impact, and others that were really fairly stagnant. And in 2025, the exciting thing is we're seeing entrepreneurs in innovation and technology in every segment of the society, from healthcare to education to energy to transportation to consumer products to information technology. There'll be many winners. There's going to be a lot of disruption over the next 5 or 10 years. I think the ceiling of how high and how much value can be created very quickly keeps going up. I think there is enormous potential and very exciting, very optimistic. There will be problems, there will be setbacks, there will be displacement, there will be tragedy. That's the human condition, but technology is pushing humanity up and to the right. And again, we just put a few of the companies that we've invested in recently here. I could have put 100 more, but investing really is an act of faith, an act of optimism, a belief in the future. Venture capital, entrepreneurship is fun, interesting, high highs, lows, lots of failure, lots of time and patience and hard work, but these are builders trying to build new and great things. And we just are super proud and excited and privileged to support so many of them. So just to wrap up, I think we're in a period of enormous technology disruption and change. The next 5 or 10 years are buckle up. I think it's going to be an amazing period for technology and innovation. I think we're going to see more with less, for sure. I think you want to keep your eye on shadow trends, counter trends, pushback. But I think, again, the force of these technologies is just irrepressible. And no, it's not too late. You want to be part of this professionally, personally. You want to lean into this in your career. You want to pick the vertical space that really gets you excited and invest in it personally with your time, your passion, your money. That's our point of view. And those are our predictions, really. So again, we're a venture capital firm, Alumni Ventures. You can check out our website. We like talking to people. So if you're interested in what we do, some of the companies, we just released our 2025 Apex 50. These are companies like, Infabrica, Grok, Blue Sky, Aura, that, 46 others that we're investors in, super excited about. I hope you want to learn more. And if you're looking for a venture partner, we'd like to be that person. So thank you. I think we're going to take just a few questions that have come in. So first question, what sectors do you believe have the highest potential in the next period of time? Again, we really invest in teams tackling specific problems. Again, I think there's opportunities really in the big areas of our economy. So I would be thinking a lot about disruption in healthcare. I'd be thinking a lot about disruption in energy. I think we're going to see a lot of transformation in education, communication. I think space is a very exciting area that has a lot of legs, a lot of medium, long-term potential. Again, just visit our website, look at the companies specifically we're investing in, and as a co-investor, we're investing alongside name brand venture capitalists. So I think we're a pretty good proxy of the venture industry. Could you explain a little bit about AV's co-investment strategy and how you think about investing in the venture capital space? So yes, so we co-invest alongside really strong lead investors, firms you'd recognize, Khosla, Sequoia, Benchmark, USV, et cetera. We try to add value. We're usually participating, in 5-10% of a round of financing. So we take a small piece of a lot of deals. We work with entrepreneurs to use our network to help them. By having such a large community, a large group of kind of well-placed investors, we work with a lot of companies. We don't oversell ourselves. We don't have the same role as a lead investor, but we think we can add a lot of value as a co-investor, especially for the check size we have. So that's kind of our strategy: large, diversified portfolios, co-invest alongside really strong lead investors, put more money to work in the companies that really get traction. So that's really our strategy. Okay, next question. Strategic technology, what do you mean by that? Strategic technology are those technologies that really relate to a country's strategic future. So I think it's well established that, you know, power in 2025 for the next decade from a national perspective comes from being really good at technology, whether that be AI, cybersecurity, drones, energy, all the chip manufacturing, all the things that really are drivers of our world, both economically, information, technology. So we have a strategic tech fund that invests, that pulls together investments along that dimension. A lot of people believe that that is something that they want to support, that they also believe is a tremendous investment opportunity. So we do have a strategic tech fund that really looks at all those strategic areas of national interest, and invests in entrepreneurial companies in those spaces. What advice do you give aspiring entrepreneurs just getting going in their careers? Yeah, I mean, get into a space that you think is really exciting and interesting and has legs. You want to probably be in a major city, San Francisco, New York, Boston. These places are, you know, where technology thrives. There's lots of opportunity to network, learn, experiment, workshop your career. Again, I'm a big believer in getting to a medium-sized company, meaning, you know, 50 to 500 people when you're just getting started, so you can be mentored, so you can learn. You know, if you have an opportunity to work at one of these very fast-growing entrepreneurial companies, like in the Apex 50, I think you jump at those kinds of opportunities. I think starting a business is a decade-long commitment that you should not rush into. We're big believers in, you know, entrepreneurs who start a little late. I know, you know, you got the Zuckerberg examples, but many examples of companies that, you know, have a leader who starts a little later in life. Again, I don't think there's a rush. I think the great opportunities are ones you just feel compelled to start, and not just, oh, I want to be an entrepreneur and look around and come up with an idea. A big fan of energy, big care of kind of disrupting healthcare, education. I think space is a place that a lot of young people, I think with space, you're looking at a 20, 30 year career, where you can be getting in on the ground floor of some really amazing businesses. So, okay, so last question, and we'll wrap this up. 2025 will be year of the deal. What does that mean for investors? I think this is just a year where there's going to be companies that, you know, were founded, you know, 5-10 years ago that are going to merge. There are going to be some exits. I think the IPO market will soften, which has been pretty constrained the last couple of years. I think we're going to continue to see the role of secondaries in the venture economy. Bottom line is there's just more opportunities to realize value for investors, I think, coming in the next 2 years versus the last 2 years. And most investors like to recycle the money and reinvest and have things compound over time. So I think hard to predict the future, but I think the next 2 years will be better than the last 2 years from a exits perspective. Okay, we'll wrap up. Quick half hour. Hopefully there was a few ideas here that you find valuable. Love to talk to you. Thanks for your time today.